Stocks are looking pretty decent right now. Equities building some optimism with a nice multi-day rally now, ending at highs close to them, and the fact that overnight selling has turned into dip buying as a bull's favorite type of rally. So things are still tense, and the president's speaking right now, but I think if there are no additional rates beyond 25%, which is the high bar we've talked about already for tariffs, and if there's no immediate pushback from other countries, a lot of this should be priced in. Now, the yellow light's staying on stocks, but I am going to change something on my risk radar by the end of the segment. So give me 3.5 minutes. First of all, though, in the words of Trent from Swingers, double down always. That's pretty much where I'm at right now. Last week, the bond signal threw me off, but I'm still feeling confident that the message on the macro is one, that the economy is going to be able to skate through, even though it's in a rough patch, because the Fed is pretty ready to cut. That'll also get into my light later on. Firstly, the 10-year yield just can't push to new lows. I love the pushback I'm seeing from bond bears. That's been a crucial part of my thesis. However, it looks like bonds have moved on from tariffs. They're probably thinking about the economy, which is why my optimism here is generally specifically about tonight and into tomorrow around the tariff announcement in this so-called Liberation Day. It just is hard right now to argue that we haven't modeled or at least thought about all the worst possible outcomes. So I think tariffs should be a volatility fading event. Now, the employment data at the end of the week in services tomorrow might be a different story, and that's why you want to watch bonds. If yields do cut down into new lows, which they tried again today before getting pushed back, then that's telling you this is now moving to a conversation about employment. However, until we actually see that, there's reason for continued optimism. The 10-year yield found a little bounce. That's crucial that we didn't break down. The other is the dollar, which has been stabilizing. I didn't like to see the dollar drop off today, but maybe there's just some gyrations there in the short term. The other thing is that you keep seeing the leaders of risk leading risk. Tesla managing to once again rally through early selling. Bitcoin too picking up the pace a little bit. These two things generally are signs of risk appetite building. And again, this is difficult to project beyond the tariff situation because we do have a lot of economic data. But right now, the charts are looking encouraging still. And that's why I'm not putting the red light on stocks. I'm keeping it yellow, and I'm sticking with the optimism, though, because I do think we're going to see these relationships start to align again. And I think that dollar stability tells us the tariffs have been priced in. Obviously, you got to stay on your feet for jobs data over the next 2 days. But tonight, and thinking in the short term, I'm putting the green light onto crypto because the fast twitch risk appetite is kicking up a little again for Bitcoin and for Tesla too. And the other thing for BTC, because it's outside the tariff stuff, if vol fades on tariffs in general, that's good for coins. And then even if the data don't go well, sometimes Bitcoin stays afloat because folks start thinking about rate cuts. And I just don't think the economy is that bad to where a couple rate cuts couldn't help stabilize things. Not a green light for stocks yet, but as we start to tick up in risk appetite, Bitcoin's the fast twitch and cryptos too, so I'm watching those number one. See you tomorrow.